The primary market has gained momentum once again. After Sona Comstar and Sham Metallic's opening for subscription today, the street is readying itself for two more IPOs this week. The first one is Dodla Dairy and the second one, Krishna Institute of Medical Science. We've done some deep diving to get you all the relevant details that can help you decide whether you wish to subscribe or not. Let's start first with Dodla Dairy and its IPO details. If you look at the subscription date, it opens on 16 June, will go on till 18th June. Price band is 421 to 428 rupees a piece. Fresh issue is worth 50 crores, OFS close to 470 crores, taking the total IPO size a little over 520 crores. The proceeds will essentially be used to repay or prepay companies' borrowings, finance capital expenditure requirements, and meet general corporate purposes. To tell you a bit more about Dodla Dairy, it was incorporated back in 1995. It's an integrated dairy company in south of India. It's engaged in procurement, processing, distribution, and marketing of milk and other dairy products. It processes and retails milk and produces dairy-based value-added products, the likes of curd, UHT milk, ghee, butter, flavored milk, ice cream, etc. It's the third largest player in terms of milk procurement per day. It is also the second highest in terms of pan-India market presence among private dairy players. It has significant presence, like I said, in the southern region. As far as the operations go, the company's operations in India are primarily across the 5 states, which is Andhra Pradesh, Telangana, Karnataka, Tamil Nadu, as well as Maharashtra. So these are essentially the markets where it operates in India, but it also has international presence and it's based in Uganda as well as Kenya. It has several listed players as well. For comparison's sake, you can peg it against a Hudson Agro, Parag Milk Foods, and a Heritage Foods. As far as financial performance goes, it has delivered consistent growth over last 3 fiscal years, both in terms of financials and operational metrics. From FY18 to FY20, the revenue has seen consistent expansion, and the bottom line has also improved quite significantly. If you talk about the key strengths of the company, it's consumer-focused player with wide range of products under Dodla Dairy and Dodla brands. It has an integrated business model for end-to-end capabilities. It continues to invest in modern technology and equipment to improve operational efficiency and cater to changing consumer preferences. It looks to grow domestically and internationally by way of organic and inorganic growth. So there are some ambitious plans in place. They've increased focus on dairy-based value-added products. It has the highest ROAS compared to all of its peers. In FY20, it came in at 17%. It also has highest gross asset turnover ratio, averaging 4.4x in FY20. Flagging off some risks as well, the management said inability to procure adequate amounts of raw milk at competitive prices could be a key risk to watch out for. Uncertainty regarding COVID impact, contamination or deterioration of products or raw material, given that it's a highly perishable item and raw material that they're working with. The demand-supply mismatch in raw materials due to inaccurate forecasting could be another risk to watch out for. The operations are mainly concentrated in the south, so any adverse developments in that region could also affect the business. So these are some key risks and potential weaknesses to watch out for. Moving on to Krishna Institute or KIMS, the subscription dates are same as Dodla Dairy, 16 to 18 June. Price band 815 to 825 rupees a piece. There's a fresh issue worth 200 crores, OFS close to 1944 crores, taking the total size of the IPO close to 2144 crores. The proceeds will be used to repay or prepay companies' borrowings and meet corporate requirements. Now, this is essentially among the largest corporate healthcare groups in Andhra Pradesh and Telangana, if you look at the number of patients treated and treatments offered. It provides multidisciplinary healthcare services with focus on primary, secondary and tertiary care in Tier 1, 2 and 3 cities. It's equipped with high quality medical equipment, employed practices and policies which could propel growth in times to come. As far as operations go, as of March 2021, it had 9 multi-speciality hospitals under the brand name of KIMS Hospitals. There's an aggregate bed capacity of 3,064 under KIMS hospital brands, including more than 2,500 operational beds. The flagship hospital is in Sikandrabad. It's one of the largest private hospitals in India. They also have presence in Nellore, Rajamundry, Ongole, Srikakulam, Kondapur, Vizag, Anantapur, as well as Kurnool. Listed peer comparison, you can look at it against an Apollo Hospitals, Fortis, Narayana Hrudayalaya, Max Healthcare, as well as Shalby. Now let's talk about the company's financials. KIMS has achieved healthy profitability in both Tier 1 and Tier 2 and 3 markets by identifying regions with significant underserved healthcare demand. You can see the performance from FY18 to FY20, where it has shown consistent uptick in both top as well as bottom line figures. Talking about the strengths, one of the largest corporate healthcare service providers in AP and Telangana, one of the key strengths and triggers to watch out for. It has a highly qualified and trained doctor and medical staff. There are strong operational and financial performance seen. Historically, there's strong understanding of regional nuances, customer culture, local medical professionals, and they also had a very disciplined, low leverage approach to acquisitions, which has helped them maintain affordable pricing model. Also propelling growth not just in Tier 1 but Tier 2 and 3 markets as well. And finally, coming down to the risks to watch out for. Certain hospital buildings owned by KIMS either do not possess occupancy certificates or are not in compliance with the permits obtained from relevant municipal authorities. This may or may not have an adverse impact going forward. They have significant dependence on Secunderabad Hospital to grow in revenue terms and maintain a healthy financial position. They're heavily dependent on certain specialties for majority of revenues, the likes of cardiac sciences, neurosciences, oncology, orthopedics, and gastric science. There's, of course, something that the management has also flagged off: intense competition from other healthcare service providers. There's limited knowledge and records of documents relating to corporate actions which were undertaken prior to February 2003. They've also been involved in certain legal proceedings, and any adverse developments may adversely impact their business as well. So there you have it. You also know what are the cons to watch out for or the risks to watch out for. Hopefully, now you have all the relevant information about both of these upcoming IPOs that can help you decide whether you'd like to park your money in any of these or not.